All right, so sorry, I went back. So today's topic is C levels PDR. So we are now on topic three. Topic three, course three, my course. Uh, Let me check it out if it's truly course three because I'm done with course two. Um, what is it? Course three. So course three is key level PDRA. That is course three, which is we are now in right now. Key level PDRA. The most useful key level in what? In the exact strategy I'm trading, which is CRT. CRT are what? The most useful key level. I think the intermediate students already know much more about this, so I don't need to share this video to them. But this is a beginner course, and also really important with the intermediate student as well. The most useful key level in what CRT. The most useful, the most, let me say, the most effective. So now the most useful key level, the number one thing you need to understand and the number one thing you need to use in a key level PDRA, which is what? The fair value gap. Let me write it down so you guys can see it. Fair value gap. Fair value gap. Yeah. Let me reduce this. Wait. Sorry. The fair value gap, FVG, stands for FVG, right? Fair value gaps, FVG. Those who are new to this, what do we call it? Your course should write them down. FVG, fair value gap, right? Second order block. Let me state it well so you can see it. Excuse me. Fair value gap. The second one is what? Order block, OB. Order block. Second one is what? The third one is what? Swing high, swing low. That is internal, external range, right? Swing high, swing low, hold low. Swing high, SW. Swing high, swing, sorry. Swing high, slash, swing low. Swing low. These are the most effective and the most useful useful key level I normally use in every trade. Stick with this: fair value gap, order block, swing high, and swing low. Stick with what? This. Don't go beyond this. Don't go what? Above or beyond it. Just stick with this. Fair value gap, swing high, and swing low. Let's say in a higher time frame, don't go down to lower. Always use what? Okay, I haven't give you time yet, but stick with this. Whenever you want to use this, use them either on a daily time frame, weekly time frame, or what? The 4-hour time frame. These three time frame: daily, weekly, and H4. Use what? These three time frame. Let me clear it so you can write it down well for you. The daily, the weekly, and the what? 4-hour. Or we can start from the 4-hour, the H4, H4, daily, and weekly. These three time frame are very, very what? Important. The H4, the daily time frame, and the weekly time. But as a beginner, start with the daily time frame. Only intermediate traders are allowed to use the H4. Beginners traders are supposed to start with the weekly and the daily time frame, just not to get confused. Start what with the daily time frame, not the H4. Leave H4 for now, right? Leave H4 for now. Start with the daily time frame, weekly time frame, and what? Yes, the daily time frame and the weekly time frame, exactly. So now, let me give you some explanation, right? Is it explanation? Fair value gap. Should I explain it? Fair value gap. Okay, now, what are we discussing on today? We are discussing on what? Key levels and what? PDRA. Those are the same. Key levels and PDRA all are the same. Those are the same. So, fair value gap. A fair value gap refers to the actual value of an asset or a product, stock, or whatever you call it, but those are on business side, while in forex it's different. You know, the what we call value, an area that has value. Fair value gap, an area that has value, that has potential. You understand, right? All right. So a fair value gap refers to the price gap created by aggressive what buying or selling pressure. Write it down. A fair value gap refers to a price gap created by aggressive buying or selling pressure. This imbalance indicates strong institutional what do you call it, activities. What? It indicates strong institutional activity, which means it is very valuable. It's not like other block. And what? It is let's say providing traders with a high probability setup, which means the you like that gap you are seeing. I'm going to show you an example. That gap, fair value gap. Let me show you an example of a fair value gap. Let me give you an example. Let's go down to euro dollar. I think yes, euro dollar. It's only fair value gap. Let me show you the useful of this fair value gap. I think it's only the intermediate traders that actually know much more. They know much more about fair value gap. I don't need to dive myself so bad. So let's go down to euro dollar. What is euro dollar saying? Let me show you an example of fair value gap. Network is lagging. I'm so sorry. And pause it for now. So now, look at what price did. Look at, we have one fair value gap here. Look at this fair value gap. Where is it? This one here. Look at how price reacted from it. Remember, we are dealing on what? CRT. Candle range what? Theory. Right? And we, in every key level, we're expected to spot CRT in any key level. Right? Okay. Now, we have a fair value gap here. And we spotted a CRT. Can you show me a CRT? Let me give you a second. Our key level is this fair value gap, right? Okay. So now, where is the CRT? Look at it. Accumulation, manipulation, distribution. You understand, right? We still have another fair value gap here. Let me clean this chart so you guys can see it clearly. Let me clean it. Let me erase this. Let me erase this one. This one. Sorry. This one here. So now, let me even make a replay of it so you guys can see it. Where's the replay? All right. So we have this one here. All right. So now, We are now done with this one here. We look at the first fair value gap here. Price gave us what? Accumulation, manipulation, distribution. Can you see it clearly? First accumulation, price manipulated the low, and what? Distribution, which means price tap inside our key level, fair value gap, right? Okay, now look at this one here. Fair value gap, right? A gap. Let me mark it for you so guys, so you can see it clearly. Let me remove this. All right, this one here. We are already done with it. So we still have another gap. Where is the gap? Look at it here. This gap. Price hasn't filled it, right? We still have a gap here. This gap here has been filled. This gap is very wide, right? Okay, now look at our accumulation candle here. We are now waiting for price to manipulate the low. Then what? We push higher towards the high of the candle. So now let's give a replay. 1, 2. Price manipulated the low inside the fair value gap. So now our target is now what? The high of the candle, right? The high of the candle is now what? Our target. Let's see what price does. Boom. You see? Price hit our target. Play it again. Accumulation manipulated the low inside the key level and what? Distribution. Right? Very good. Hope you now understand it. Okay, now let's play it. We don't have any fair value gap here. We don't have any clear fair value gap. Let's see what price does. Imagine, see now price is now making noise, a lot of noise. No fair value gap, no gap. There is no gap. Price is now making a lot of noise. If there is no gap, don't take any trade. All right. So now let's move to swing highs and what? Swing low. Swing highs and swing low. Those areas too are also what? A key level. Right? Swing highs and what? Swing low. Let me give you an example. I think we have one example here. Look at it. This one is also an example of swing high and swing low. We are looking for CRT to form in any key level, either here, or here. We're looking for what? CRT to form. So now let's give a replay. Look at what price did here. Look at it. Let's assume we never took a trade from here. Look at this swing low. Let's give a replay. All right. Okay, now we got the dog of this swing what? Low. Right? So now what are we expecting? Are waiting for CRT to form in this what? Swing low. The way we saw CRT inside the form in fair value gap, that's exactly the way we want CRT to form in this swing low, which means we will want price to sweep the next candle to dog the previous candle's low and close inside it, and then what? Expect price to come back to our target, which is this one here. Let me draw it so you can see it. This is our target now. This high here, right? That is now our what? Target. Let's play. Okay, now price didn't take out the previous swing what? Low, which is this one here. Right? So once price take it, we want either price manipulate the candle and distribute, or manipulate and close, then distribution will continue. That is 2 reasons. So now let's see what price does. Boom. Price manipulated the candle and what? Push high. You understand, right? Same as what? Swing high, swing low. Same thing. Don't complicate things. Just be what? Rule and discipline. I'm teaching this. This is a private course. Very good. Let me give you another example. I think we have another example on sorry, is it gold? Do we have an example on gold or is GBP? Aha, we have an example on GBP which we are now playing right now. This is a very clean word example. So now look at what GBP is saying. Hey, look at what look at it. I actually what draw with and it is even a live trade. Everyone is partaking on it, right? Let me clean this. Let me clean this. Let me clean this. Let me clean this. It's not necessary for you guys. This on intermediate traders that are absolutely participating on this trade. So now look at what I actually explained right now. Price took out the previous swing high and gave us a CRT. So now our target is now the previous candle low. This is now our target. Look at this fair value gap. Look at another fair value gap here. We are now expecting price to come to this fair value gap, give us a CRT, and what push high. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. In any key level, look at it again. Look at this key level, fair value gap. Accumulation, manipulation, distribution. In a swing high, accumulation, manipulation, distribution. Price is not trying to distribute to the downside. Price is now distributing to the downside, which is now our target. Hope you guys understand what I'm talking about. Other block. Let's go down to gold. Let me give you an example. I'm just trying to show you this is a live trade, and we are not expecting it to happen. So this is a live trade on gold. Look at gold. Look at gold. Order block. The order block should be clean. The order block should be clean. Order block CRT. Accumulation, manipulation, distribution. We are now expecting what price to come to this top, reaching even to the complete weekly CRT high. Right? Accumulation, manipulation, distribution. Look at this fair value gap. Price accumulate, manipulate, distribute. Key level, order block. This dark candle accumulated. This one here didn't manipulate. The next candle manipulated the low and what? Distribute. Let me remove this thing so you can see it clearly. Let me remove this one here. Hope you are seeing it clearly now. Manipulated the low is now what? Trying to distribute to the top. If price doesn't get to the top, the next candle will get to the top. CRT. Accumulation, manipulation, distribution. Which is what? Giving us a turtle soup. Turtle soup in the low. Kiss of death as well. We can call it kiss of death. While trying to distribute to the upside. If you could read my my previous note I dropped this morning, you can see I've explained everything on CRT already. I dropped the meaning of the accumulation stage, the manipulation stage, and also the distribution stage. So this is now our order block: accumulation, manipulation, distribution. Fair value gap: accumulation, manipulation, distribution. Swing high, swing low: accumulation, manipulation, distribution. Get this in your head. Always use it. Key level: fair value gap. Look at it. Fair value gap, order block, swing high, swing low, old high, old low. We can call it so. Swing high, swing low, old high, old low. You can call it so. Thank you so much.